Hello and welcome to the 5th edition of our Investment Insights series, Magellan Minutes. My name is Jennifer Herbert, Head of Listed Funds at Magellan, and today I'm joined by Magellan's Head of Macro and Portfolio Manager, Arvid Streimann. Today we'll be taking a closer look at what's been happening in markets recently, the energy crisis and why we think volatility provides opportunity. Thanks for joining us today, Arvid.
It's great to be here, Jen.
Arvid, we've been experiencing a significant decline in markets, which has accelerated recently. We've seen share prices going down across the board, and we've also seen a slide in the currency. What is going on there?
Well, what's going on, Jen, is that we're going through a very large interest rate cycle. And the first thing I would say about this interest rate cycle is that we've been through interest rate cycles before, but this one is slightly different. And of course, they're all very different. And the reason why this one is different is, I would say, three things broadly. The first is the starting point. So in Australia, we started at zero interest rates, which I can't remember the last time that happened in Australia, probably never. And so that's very different. The second is that central banks around the world, they are reversing a policy which they haven't done before, which was quantitative easing. So they're moving to quantitative tightening, and the Federal Reserve and central banks around the world will themselves tell you that they don't know what quantitative easing and quantitative tightening does with a high level of certainty. And then the third thing I'd say here is that the level of inflation is at a 40-year high, which means that the amount of policy change, the amount that interest rates are going up, the amount of quantitative tightening that's occurring is a lot. Okay, and I think it's interesting to think about why inflation is so high. I think this is really interesting to think about with respect to where markets are going. So what's driving inflation? I'd say the first one would be the COVID lockdowns, and we're not locked down anymore, as you can see. But in China, they're still locked down. So what happens in China is really interesting. Okay, the second is that the US government more or less put a massive amount of money into the economy, which pushed up the prices. Everyone bid up the price of anything. And the third is Russia's invasion of Ukraine. And this is causing contributing to the energy crisis in Europe, which is causing inflation, which is causing this very sharp rise in interest rates. And for markets, what that means is, and let's talk about the share market first, because you were talking about the share market. The higher level of market interest rates in the economies around the world is having a negative valuation effect on share prices. Okay, and I think we know how that works, and that's a very strong headwind to equity returns, and you've seen that so far this year. I'd say the second thing that's drove share markets down so far this year is as those interest rates have gone up, growth has slowed, and so people are saying, well, you know what, I don't think the company's going to make as much money, which means that I'm not going to have buy the company as a high share price as I otherwise would. But the third one is that as all of this is happening, people are very uncertain. And so we all know that when people are uncertain, they're going to sell riskier assets, and some parts of the equity market are riskier than others, but in general, the equity market is, let's just say, riskier than something like a term deposit. So that's what's been going on in share markets. But the currency market, the Australian dollar is down around 15% so far this year. And more or less what's happened is that the Reserve Bank in Australia is raising rates by less than what the Federal Reserve is raising rates in America. And so people go, well, you know what, I think I can earn a higher return over in America versus Australia. So I'm going to sell my Australian assets in Australian dollars and buy US dollars so I can buy the US assets. And of course, what that means is that the US dollar is going to strengthen against the Australian dollar, and that's what's been happening so far this year.
Right. And you mentioned the surging energy prices in Europe, and I'd like to flesh that out a little bit. So we've obviously got the Ukraine-Russian war that's contributing, but what other factors are at play?
Well, you mentioned Russia, Ukraine, and what's happening there. I would say that that's impacting the gas market. Okay, well, when I'm talking about natural gas here, not the gas you put in your car. And what's happening at a very broad level is that there's been a negative supply shock for energy in Europe and around the world as well. It's happened in gas because Russia said, well, I'm not going to send any of that gas to Europe because you're supporting Ukraine and we're at war with Ukraine. So we can understand why they're doing it. Okay, and that's leading to higher gas prices. But it's not just the gas prices which have gone up and driving this because of a reduction in supply of gas. I would say there's also been a reduction in the amount of hydroelectric power which is being generated in Europe, and that's largely because of the drought. So there's less water going through the rivers, which means that there's less water going through those big plants. But that's not all. In France, which has quite a lot of nuclear reactors, a lot of those reactors are offline to do some overdue maintenance. And so that's reducing the amount of capacity to electricity generation capacity in that from that source as well. And so that's adding to this shortage of energy. And then on top of all of that, you had OPEC earlier this month saying we're going to cut the amount of oil which we produce by $2 million barrels per day. So all of that means a negative supply shock, which of course means prices are going up because demand's been fairly stable. Now the European governments have said, oh, okay, well, we can see this and people getting unhappy, so let's try and reduce the amount of energy that they use. And I think we all know that in Europe, people aren't allowed to put the thermostat up as high as they used to. But at the end of the day, it's a reduction in supply of energy, and because energy, particular coal, natural gas, and also oil, because these things are globally traded commodities, what's happening in Europe is impacting global energy prices. And that's why when we go to the petrol pump, we're seeing higher petrol prices as well.
Right. And on a more positive note, we all know that volatility provides opportunity. So where do you see the opportunity from, firstly from a regional perspective, but then also from a thematic perspective?
Yeah, and I think this question is a very good one, because when there's high market volatility, I think a lot of people say we need to run for the hills, but you may actually want to run for the share market. And so when we're thinking about the regional preferences that we have, I would say that the first thing is that we all know that global growth is slowing. So this would say would be a regional preference. And I think the US is a lot more interesting to us than the rest of the world, let's call it Europe and China at the moment, because we would expect their economies to be more resilient. And just to be brief there, if we're thinking about Europe, we just talked about some of the issues that they're facing, which is the energy crisis, which the epicenter is in Europe. So, of course, I think that their economic outlook's not going to be quite as good as the Americans. And then when we think about China, where the economic outlook there is a little bit rocky as well, because they just started their National Party Congress. And one of the things which they said there in the lead up was that they reiterated their harsh COVID-0 lockdown policy, which means that if people were expecting the economy in China to reopen and a lot of people to start spending again, like they did in Australia and America and Europe, then that's been pushed out. Okay, so in terms of our relative regional performance, I think the North American continent looks relatively attractive at the moment. But if we're thinking about industries and thematics, I think it's interesting to think about, okay, so what's changed in the past 3 months, 1 year? Now, I think one thing that has clearly changed is that energy security has become a lot more important. And I think the Europeans are spending a lot of time thinking about energy security right now. And so if there is a shortage of energy supply, whether it's because there's not enough mines or maybe there's not enough generation capacity, then we know that this focus on energy security is going to lead to more investment in these types of things. So I would say that's one thing that's become more attractive, because it's become a more important thing, energy security, a more important thing for governments around the world. In terms of the other things that we find attractive, I would say that we still find the transition to the cloud attractive. The economics and the business case there are just so powerful. So that hasn't changed, but it is still very attractive to us. And on the back of that, and I think we can all relate to this, semiconductors, which are everywhere. There's one in my watch as well right now. So semiconductors, sure, there's a cycle, but we all know that there's going to be more semiconductors, more electronics being used by people. So we're still very interested in that. But if I leave you with one last thought, we're going into a cyclical economic slowdown because of this interest rate cycle. And I think that quality companies are the companies which you really want to be interested in right now, because quality companies are the ones which are going to perform better through thick and thin. And maybe in the past couple of years when things were quite good, that was one thing. But to survive through this part of the cycle, I think quality companies which can invest through the cycle come out the other side in a better position, that are the type of companies that you should be interested in addition to our regional preferences and also some of the big thematics that we're interested in right now.
Arvid, thank you for your insights today.
It's a pleasure, Jen.
And thank you for joining us. If you have any questions, please don't hesitate to reach out to the Magellan distribution team and feel free to share this update with clients and colleagues as you see fit. Take care and see you soon.